Nevertheless, let's get in Shiv Puri, one more fundamental voice, to talk about what his sense is about the markets and investing and what one should do in a scenario like this. Shiv, good morning and thanks so much for taking the time out. Can you hear me?
Yes, I can. Good morning.
Okay, great. Shiv, so I guess what our viewers want to hear from you right now is that what should the approach be? It's one thing to say that India is a long-term structural story, so great, go out and buy into good ideas. Tactically, does it make sense to do it now, or do you believe there could be some more pain and there could be better entry points?
Well, I think it's very dependent on what you were just saying earlier, which is, it's on a company-specific basis. And some of the best opportunities come when there is this turmoil in the global markets. And so I think for people who are doing their work, these are certainly opportunities. As I talked to you a few weeks ago as well, the concern on China has now become, even more acute. And that was the big risk, when we spoke back then, and it continues to be. And frankly, just nobody knows the extent of the problem. But when you see some of the movements that you've seen in the last couple of days, it's pretty clear that the problems are quite severe. So there can be, and there will probably be, volatility in the markets, especially as you enter the September-October period. But I think these are opportunities.
Shiv, okay, so let's try and do this. The big question that we're asking all our guests this morning is, where is value emerging? You're mentioning that it's a bottom-up story. Yeah, let's forget levels for the time being, because what you buy tomorrow may well be down 5%, and if you're investing, that should be par for the course. To your mind, where is value emerging in the Indian markets?
Well, I think there's value in a couple of different pockets. The one area that you can see value to start emerging is the pharma sector. Clearly these are companies that are beneficiaries of the rupee depreciation, and we've seen a sharp correction pretty much across the board, not only in pharma but everywhere. But as you see the rupee depreciating, they are able to capitalize on that pretty well. The IT services sector, a little less so. They're obviously the beneficiaries of rupee declining, but I think the world for them has changed in the sense that their clients have become much smarter and ask for repricings a lot sooner than there was before, which is not typically the case in pharma as yet. But still, we feel the IT sector is still going to be fine, and they're going to continue to do well. So if you ask me what's changed in the last few weeks that's created some value, these will be the areas.
Well, IT it is. Who would have thought we could FaceTime with Shiv and have him on air?
That's technology for you, and that's Apple for you. You'll be surprised. Last night, even though there was gloom and doom in US markets, and Apple gets a lot of business from China,
yes,
it did not fall.
Even I read that tweet or email he sent to Jim Cramer.
Yeah, no, but I heard somebody else as well mention that, just their basic statistic or thought process was that if you are bullish on the US markets, you cannot be bullish on the Dow without being bullish on the stock of Apple, is what the common consensus is.
Hold your phone, I'm trying. You're the only one left. Okay. So, but, Shiv, yes, technology, pharma, yes. But, is it a blanket buy when it comes to these sectors, or would you still tell investors to be selective out there within the IT pack as well as pharmaceuticals? Because what we saw play out last week was any and every mid-cap IT stock was moving, one on Monday, the other one on Tuesday, and so on and so forth. Is it time to get selective irrespective of what you're buying?
In IT services, specifically that you ask, it's you have to be very selective. And the reason I say that is, there are a lot of sort of mid-cap companies that have, a single or a dual product offering, especially into the new changes that are happening on social, mobility, analytics, cloud, etc. And they've managed to get a little bit of mind share and revenue share from some of the customers. But they don't have that knowledge of the full system and setup that the bigger guys have, because they've been working with these IT systems for many, many years. And as any Fortune 500 company or Fortune 1000 company will tell you, their IT systems are very complicated. And so someone coming with a better user interface just cannot ultimately scale. So I think it's in this scenario, some of the bigger IT services companies have a huge advantage. They will acquire some of these companies, but not necessarily in India. It could be globally, and build the offerings that they need to scale into the new world. So I would say that in this the strong are going to get stronger.
I'm sure your clients must be asking you tough questions. The curiosity levels would be high. They must be curious to know that what are you planning to do with the funds which you are managing. So what's a simple and straightforward answer?
Well, I would say it not necessarily just targeted to any one party, but I think at this point, it's for anyone who's been looking at public equity investing for a long period of time, they would know that this is something that happens. The scale and the magnitude vary, but especially in emerging markets, this is something that happens every few years, and sometimes even less than that. And what's worked in the past has always been to have your list of companies within certain sectors that you feel are able to compound over a long period of time. Make sure you're fundamentally comfortable with the company, the management, the quality of the business, and then the only thing you really wait for in something like this is for valuation. So I think in these times, it's no point worrying too much about what is going to happen in the future of China, because it's impossible to figure out. There are certainly some tailwinds in the Indian economy, although things can move a little faster, frankly, but they are moving in the right directions. You're in an environment where globally people are struggling for growth. Interest rates are zero. They're having trouble raising interest rates by 25 basis points. And in India, the interest rates are over 7%. And they have room to potentially cut. The CPI I read is under 4% and the WPI is negative.
But Shiv, I'm so with you when you say that India on paper is the best economy, it's a dream scenario for us given what has happened to crude. But in the short term, the spillover effect of what is happening to other markets clearly could be impacting you irrespective of how strong you are. So Shiv, my next question to you is that as we speak, are you a buyer in this market selectively though, but are you nibbling?
I think this is too soon. There is nothing that that requires anyone to do anything on a day-to-day basis. I think this thing is too soon, and we're just evaluating at this point.
Okay, Shiv, just stay on. Just need to mark the mark.
Let me throw one more ingredient in the melting pot, and that is crude. It's a dream scenario, Shiv Puri, for Indian economy, isn't it? Crude prices are sitting at $40. How will this change the macro setup, the dynamics, the earnings trajectory? I'm sure you've done some work on that.
Yeah, absolutely. So there are two elements in our view on crude. The first is undoubtedly very favorable, which is, every dollar decline in crude saves, $700 or $800 million for the government. The decline from 100 to 40 or 110 to 40 is obviously hugely beneficial. The second element is that the second degree benefits within India, within manufacturing, within infrastructure, also add up quite significantly in terms of lower transportation costs, lower logistics costs, lower input costs. That's also a benefit that will help the country. The only overhang on crude, I would say, which is less a fundamental reason, but more of a top-down sort of capital flow reason, is that I think that this massive decline in crude has really unsettled the entire commodity food chain across the world. It's not only the oil companies, but the oil services companies, the oil equipment companies, and it's not only companies, it's even countries in terms of how they're going to spend and their fiscal positions and their currencies. So that it's created that whole unsettling aspect. And what happens usually is if there is a sharp fall for some period of time, companies and countries are able to manage. But when that extends, as it has now in the case of crude, that's when the pain starts to come. And, for example, in the US, 20% of all credit issued in the last 1 year are to commodity companies and specifically related to the energy sector. So that is sort of one overhang. But from a fundamental standpoint, this decline in the price of crude is hugely favorable to India.
Okay, Shiv, we will leave it at that. Thank you so much for taking the time out and joining us and giving us that perspective. Well, it's interesting to hear those.